Hey everyone, Ben Williamson here from InvestorHub, here at the Ignite Summit Day 2 in Hong Kong, here with Rodger from Jindalee. How you going?
Yeah, great. Thanks.
Yeah? How are you enjoying the conference?
It's been really busy. It's been, I think a surprise to the upside, so we've been really happy with the reception here, yeah.
Yeah, awesome. I think people are really, on both sides of the equation, having a really good time, which is fantastic. Yep. So I guess tell us a bit more about Jindalee. Give us the overview.
Yeah, well, we're an Australian company where we've solely focused on our US lithium assets.
Yep.
We've got one of the largest lithium deposits in the United States. 21 million tonnes of lithium carbonate. We've got a really strategic asset. It's located in close proximity to the Thacker Pass project, which is under construction.
Okay.
And it's really, we've completed a pre-feasibility study that demonstrates large-scale, long-life, low-cost source of American-made battery-grade lithium carbonate, and so we're really aligned with the new administration.
Yes. Good timing.
Good timing.
Yep.
Focus on domestic production. So we're one of the few projects that can really make a material difference to domestic supply in the United States. And we've got, as a result, we've had good traction with the government even before the new administration, with an agreement with the DOE and potential funding in the pipeline. And we're really on federal land, so we've got tailwinds in terms of permitting reform, etc. So really interesting asset and really interesting time.
And I guess, is that what people are getting excited about at the moment, like the location of the asset and I guess those sort of tailwinds behind it?
Yeah, I mean, I think clearly...
Plus the size, right?
Yeah, exactly. I think, what's of interest, to investors and I guess partners is at the scale of the asset. It's, their initial study had 63-year life, but that's arbitrarily cut off. We're using a very small portion of the resource, 15%. So there's a lot of optionality there. I think in terms of, there's, to use a term an investor used with us, there's sort of asymmetrical upside right now. Like we're bottom of the market valuations, and there's some obviously lithium headwinds, but there's also, we've been arguably beaten up a lot more than other lithium stocks. And so really, as we unlock it through a number of catalysts in the next 12 to 24 months, you can really see the pathway to a 10 or 20 bagger. And so that's what's, getting that the interest of some of the family offices here. Yeah,
that's fantastic. And I think for context for people at home, a lot of the investors here are family office or institutional style investors, which is great. They usually take quite a long-term view, and they're in this case very much looking for that 10 or 20 bagger, which is great. You spoke a little bit about the market cycle. And might just get you to sort of dive into the lithium market, like where we are in the cycle.
Yeah. Well, if you zoom out a bit, when we had a run up in prices in 2022, had supply come into the market. We reached record price highs, and then as a lot of the production came on, we've seen surpluses and price come down. When that happened, we had market analysts saying it's going to be surplus till 2030, but the reality is it's like the lithium cycle or market is not, like other commodities, but even more, I guess, volatile. And so what we've seen is as the prices come off, projects get delayed. Half the industry is sort of losing money. The outside green bushes are maybe Pilbara in Western Australia. Everyone's free cash flow negative. In Australia, but a lot of the cost curve is underwater at the moment. Particularly Western world projects are all getting delayed. Like you need a price that's materially high now to justify investment in particularly chemical production in the Western Hemisphere. And so we've got this recipe now where we're clear at the bottom of the market. Where we've got unsustainable demand's going great, like record EV growth out of China. Battery storage is, surprised to the upside. Talking to lithium traders here, yesterday, they've got an extremely bullish view compared to what sell-side analysts are saying, who are, maintain a more bearish view on the market. And so the consensus has sort of been, it's going to be surplus to 2030. Last year it shortened to 2028. Some of the more respected analysts are saying it could be next year where we're into deficit. And some of the traders now are saying, we can see it tightening by the end of the year. So no one really knows, but you've got the right recipe forming.
Good indications, right?
Yeah, you've got demand, despite the headlines, is going fantastic. Supply, is
it's been coming off because capital's been underinvested because of the returns aren't there.
Correct. Yeah. And so it'll come roaring back, but the $1 million question is when. And we think if history's any guide, it's going to surprise everyone. And all you have
Copper
to
this year, and so many things.
All you have to do is have a look at what some of the strategics are doing. Like the guys next door to us, General Motors, elected to put in another $300 million US at the tail end of last year. We've seen bigger deals with Rio Tinto and Arcadium. But Pilbara buying the asset in South America. But there's a lot of other data points. VW investing in Patriot, for example. So the strategics know that the bottoms of the market, and so
and they know that they need a organised supply, right? Like
correct.
That's what they're after.
And so we're busy at the moment, close to appointing advisors to help run a process to bring in a partner to help fund the next stage of work post, PFS. There's a feasibility study, drill program, etc. And so really, we've got a strategic asset that can make a material difference to the US supply chain, but it really needs to be married in. And we want to position ourselves in 3 or 4 years' time to finance the whole asset, and having a bigger partner involved is going to be key to that. So we're buoyed by the interest. It's clearly still challenging headwinds there with a lot of these groups in the supply chain doing it tough, but equally there's a appetite there they know they need to move over the next 12 to 24 months to lock in future supply. So
awesome. So I think talking to investors yesterday and a bit this morning, what's the response been like? Like what are they saying?
Yeah, I mean, it's been positive. I think you only see people that are interested, right? So that's
true.
That's the buyer subset. So,
but no one needs to book a meeting, so it's good that people are interested, right?
Yeah, I mean, we've had over the something like 15 meetings over the day and a half. So that's pretty good.
Great, yeah, because they're all I think I said before, but they're all high net worth or ultra high net worth, family office, institutional style investors, right?
Exactly. And I've been really impressed with the quality of meetings as well. Sometimes these things you get tire kickers, but we're pretty impressed with the quality of groups that come in. I think reception's been positive in terms of they can see that the value mismatch, particularly when you compare every lithium company says they're beaten up, but when you actually have a look at the metrics and have a look at what we've got versus where we trade against our peers, people are like, well, and then the catalyst in the pipeline, they could
even on that basis,
even on that basis, there's some short-term upside, but also particularly as the lithium market tightens, and there's some debate around when that might happen. But when that does happen, we'll see material re-rate and some really potential for big upside. So
So I was going to ask, say someone is interested, they've done their research, they like the business. I was going to ask why now versus 6 to 12 months, but you might have just answered it. A bit of oversell in the actual headline stock with some more macro trends heading your way.
Yeah.
Is that probably the reason to act now?
I think it's kind of comes down to a couple of pretty simple points. One is we've spoken about the asset in terms of strategic asset location, a lot of tailwinds in terms of the US. But we're sort of, for a lithium company at the bottom of the market, we're well capitalised. We've got sort of $4.5 million in the bank, Australian. So we've finished all our high cost work, so we're well capitalised to get through the catalysts ahead of us this year.
Fantastic.
And we're sort of record low valuations, and so we don't need to raise funding tomorrow. We're well funded to get through these catalysts. Fundamentally, we've got a good asset. Like it's a time to have a look because like I said, the risk profile skewed to the upside at the moment. Low entry price, potential 10 bagger.
Awesome. So if people are interested in learning more, how can they get in touch?
Yeah, they can go to our website, JindaleeLithium.com, and there's an email form there. We sort of respond to all inquiries. We've got our InvestorHub platform. You can log in, ask a question, etc. So we try to be accessible and very transparent. We've got a very strong, loyal, high net worth sort of supporter base that we sort of try to keep engaged along the journey. So
perfect. Thanks, Ian, for coming in.
Thanks, Ben.
Cheers.
Appreciate it.
Thanks, everyone.